Are we live? Yeah, we are live. Nice. So, hello everybody. Welcome to TFC Daily, our daily community live stream to empower you to live the life you love while managing your finances well. Woo! Obviously, this is an initiative by the team at the Financial Coconut to keep you company during these tough times. Right? So follow us on our socials, check out our podcast for continued learning and enjoyment. Simply head to thefinancialcoconut.com for more details. We have a different segment scheduled for you every day. But specifically for Monday and Tuesday, it will be a stock geek out session hosted by your chief financial coconut, myself, Reggie, and Thomas. This 8-episode series, assuming no circuit breaker, is sponsored by Moomoo, powered by Futu, which is an investment platform with a wide array of products from US stocks, Hong Kong stocks, ETF, REITs, and more. They are seeking to create the best experience for you with free US and SGX market data, 24/7 financial news, and a global investment community. So what they're trying to tell you is to say bye-bye to traditional brokerage interface and download the Moomoo app to open your Futu Singapore trading account today. And yes, you get to unlock one free Apple share. But more importantly, today in the house, we have the one and only Alvin Chow from Dr. Wealth. Woo!
Hi, Reggie. Hi, Thomas. Thanks for having me.
Nice. Thanks for coming on. I know very short notice we got you on, and thanks for really being so spontaneous together with us. And we're going to talk about a few companies today, right? Specifically all in the Chinese market. They're all giants in the game, so I don't think they need a lot of introduction, but you may want to introduce yourself a little bit, and Thomas also want to introduce yourself a little bit, so to our community, so everybody gets to know you, and then we can proceed from there.
Yeah, I'll just keep it very short. So I'm Alvin from Dr. Wealth. So I run Dr. Wealth, a financial education company. So we do a lot of education in different kind of formats, in terms of blog posts, in terms of videos, and of course webinars, and even face-to-face classes when the restriction permits. Yeah, we've been doing that for many years. We try to, people always complain about finance is not taught in school, and instead of complaining, I try to do something about it, and that's why we are in this business. Yeah.
Nice. Thomas, you want to kind of wing it, introduce yourself? Wait, are your mic on?
Oh,
lagging.
lagging.
Okay, anyway, yeah. So Alvin, how long have you been doing this then?
No, in terms of the business, we started in 2013, so that's almost 8 years, I would say. Yeah. Investing wise, I started in 2007, so that is about 14 years. Yeah, I've been through the last financial crisis. That was the first experience of a market crash.
You've been through 2 cycles essentially.
You can say so.
Yeah. Any good tips for all of us, that are new to this cycle? Welcome back, Thomas.
Oh, I'm so sorry. Yeah, so disconnected, right? Yeah.
We're good because everybody is stuck at home, so the data usage is like peaking, right? So they cannot. It's very hard to keep up with data transmission. But yes, we're just talking about Alvin a little bit. Yeah. So Alvin, maybe you want to share with us a little bit about your market outlook. What is in your purview at this moment in time?
I think the market now is not that expensive. Of course, not on the overall sense, but some pockets of it are not expensive, right? And that's why we are having some of the stock discussion today. I do think that the China big stocks are pretty undervalued, namely Tencent and Alibaba, okay, because of all the ongoing regulatory overhang that is really suppressing the share prices. And of course, we also saw a lot of the high growth tech stocks in US getting whacked. Some are down like 50% from the high, some are even more than 50% from the high. Pretty hard to swallow, right? Especially for those who got in at the peak of the right. But if you get in like early last year, you are still pretty in good shape, right? Because last year was phenomenal for this kind of high growth tech stocks. Like the KD Woods ARK ETF is gone up 100%. Whole portfolio is not just a single stock. The whole portfolio is 100%, right? So even if this year you drop 30% or 40%, you are still in the green if you buy it right from the start. So I even within the high growth tech stocks group, I think in general they are still a little bit more on the pricey side. Okay, even though they've dropped quite a fair bit, but it's very hard to tell where's the bottom. And one way is can dollar cost average buy slowly and adds up as the share price goes lower. Crypto-wise, exciting weekend, right? Because it got whacked. A lot of people blame.
Exciting.
Yeah, exciting, right?
Exciting
Because
is the word. Yes.
people blame Elon Musk for tweets and things like this. Maybe he has some of the influence, which I believe as well. But the problem is that I think it is also has gone up a lot, right? And anything that has gone up a lot, usually some correction is bound to come, right? Maybe Elon Musk was that trigger or the catalyst, and haven't really recovered, right? But let's see how it goes. Okay, that is pretty much that. In China wise, A shares, I think they are also beaten down over 10% since the start of the year. So I think there's also some opportunity over there. Risk of inflation, people are talking about that, and the worry is increasing, and people use that as a cause for the sector rotation that we're looking at right now, right? You have the growth stocks getting whacked. Anything that's high risk, like even specs are being whacked. It's like a risk off kind of market condition. And then there's this rotation into value stocks, which have underperformed for many years, right? And this year they start to come back. Oil and gas start to come back. A lot of the commodity related companies has started to come back as well, right? So that just shows you how difficult it is to know what the market is going to do next. In hindsight, it's always very clear, right? Nobody thought about of sector rotation until it has happened. Okay, and last year the narrative was that, oh no, just forget about value, just buy growth,
Exactly.
just whack and whack, right? And then this year is then blue black for them, and it's all quiet this year, right?
Yeah,
Then
yeah.
people blame sector rotation, inflation is coming, all these kind of things. But I do think on the grander scheme of things, there's always up and down, right? It will zig and zag, and it's just a natural course of how the market moves. Yeah, that's pretty much, I think, it sums up.
Do you think inflation is a bit overblown? Like it should just affect US more than China?
I don't think so. I think it is going to be more global, just that the issue has not been cascaded down to everyone. I think in the context when you mentioned about it affects US more, right? I think certain commodities like lumber, right? Because US are frantically building a lot of houses since last year after COVID have struck. A lot of these Americans were moving away from cities and buying houses in the suburbs, and they like to use lumber to build their mansions, bungalows, or whatnot, right?
Yeah, how I wish I had a suburb to shift to. Just saying.
Yeah, exactly. Whereas in China is the opposite, right? They are going to the cities. They are living in those kind of concrete jungle, which don't really use lumber. So in a certain sense, I think you're right. In the certain commodities impact the Americans more. I think one is lumber. Lumber prices have like shot up, I think, at least 4 times since last year. So it gets very expensive nowadays to even build it, and I think the supply is not even enough. Yeah, and it's spreading to other raw materials, right? Copper is also in the news lately. Semiconductor has a shortage of chips as well. But all these problems, I think, has not been cascaded to the last person, right? So we don't
which is
feel
the
that
consumer.
yet. Yeah, not yet, right? So I think they are just drinking down that supply. That's possible, right? We don't know how long that supply is going to last, and we don't know how long the supply will be replenished, right? That is still a big question mark.
Yeah. So do you think that is a cause because of the global supply chain? Like there's a kink in the global supply chain, and then that's why this whole thing is happening. And it's not so much about having a lot of money slushing around in the economy, because like by right we talk about US because like the US has printed a lot of money, right? So we believe that the US in itself will have a high inflation rate compared to other countries. But you said global. So am I sensing that what you're really saying is a supply chain problem and not so much a monetary problem?
It might be both, right? It might be both. So supply chain wise, I guess plays a big part as well. Because of COVID last year, a lot of the disruption has happened. Some people died, and some stopped working for a period of time, so that supply just get cut. But again, this kind of problem takes time to cascade, right? Because there's always a warehouse to store your reserves. Okay, and nobody panic about it. People are more concerned about saving lives. People are more concerned about getting the vaccine out and distribute to as many places as possible. Nobody was caring about whether Are you working at a steel mill, right? Are you working at a copper factories? Nobody gives a shit, right? At that point in time. So people don't know the consequences of it, and then suddenly, fast forward 1 year, you start to realize that, hey, it seems like there is some shortage, right? Why I call this supplier, he's running out. I call another supplier, is running out. Something is not right. Why is this happening, right? So it will take time for the supply to ramp up, right? So commodities is always a supply shock issue, right? It's never a demand shock issue. And I think that has cascaded down. In terms of monetary policies, I do think that loose monetary policy does create more money supply, and people will tend to be more liberal with the way they use money, right? Whether they dump into, for all you know, right? There may also be speculators who just dump the money into all these commodity futures, right? Betting that they will go up further. So that fuels the demand as well. So that's why I think it is composite kind of factors that probably is driving up all these prices. Yeah, but there's no way we can prove or disprove
Exactly.
what are the driving factors. Yeah, we can only make our
Exactly.
best guess. Yeah.
Exactly. So yes, that was a very high level over about how you see the current market, right? So before we dive into the companies itself, maybe you want to set the premise of like what are your investment ideologies, what are your core things that you look out for, so then that will form the basis of how we understand how you see these companies.
Okay. The bigger picture is that I try to build a portfolio that is diversified in different things. Okay, diversified in a few factors lah. So one big one is in terms of strategy. So I don't just do growth, I don't just do value, I do both at the same time at any one point in time. It's just that the weightage may shift, right? Historically, we have always seen that value growth, they will take turn to outperform each other. Okay, so and it's hard to guess, right? Like
This
this year,
year, right?
yeah, it's like nobody expected it. A lot of people just thought value is dead forever,
Mm,
right? Because of all this disruptive technology that's coming in. But then it just shocked everybody that it just came up alive and became, I don't know, maybe now it's a vampire state. And that is the strategy level, right? And then I try to diversify within the geography. So I invest in US, China, and Singapore at this moment, right? Because I do think that in terms of growth stocks, US and China still present the best ideas there. Singapore is not so growth, right? Because of our very small market. But value, you still can get it pretty much.
Thomas don't agree. Thomas don't agree.
No. Go ahead.
Yeah, I mean we can disagree, right? Agree to disagree.
Yeah.
In fact,
But
Singapore,
I agree.
yeah, Singapore is one of the best stock market this year. Right. Of course, a lot of people say, yeah, for many years it's been underperforming, blah 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 blah. But I always find that there's value in value. Okay, there's value in value investing. So I try to have that kind of different strategy, different geography. And then I also try to diversify in terms of the risk. Okay, so I call it the Barbell portfolio. Actually, I stole it from Nassim Taleb, where 90% of the portfolio, you invest in something that's core, long term. You don't take so much risk. Something that's lasting, whether is it growth or value. Then that 10% is for me to take risk. Yeah, for the outsized return. And if I'm wrong, I just blow up that 10%, right? I still have my 90% investment with me. So in that sense, I don't give up some of that upside. You know, sometimes I don't know whether is it a Chinese issue, right? You have that gambling kind of
Itchy,
yeah, itchy, right? They want to tick out, right? Then if you have a very restrictive portfolio, you know, if people keep talking about that big idea, you should just invest for the long term. You should just buy ETF and forget about it. We are all humans, right? We don't make decision 100% rational one. So that 10% is to give me that leeway to blow off the steam, right? To gamble in a responsible manner. Let's put it that way. So I will tend to take risks, like even if the idea is how to say not very well researched, you know, but it's just like the gut feel that, you know, should just take a bite, right? Even if I'm wrong, I'm not going to die from it. And that is how I do it. And like, for example, I invest some of that 10% into crypto, and that did well. Yeah, in fact, it was crypto that pulled up the entire portfolio, right? In this period where whether is it China, US. Some of the stocks get whacked as well. So that really pulled up for the last 1 month in terms of that performance. And even speculative stuff like specs and things like that, I keep it within at 10%. So that's how I structure it, and pretty much from a portfolio angle. And then within the more tactical level, in the per stock level, per idea level, that's where I do dive into more research to really understand what I'm investing in. And of course, valuation is important. Am I getting a good price out of it? Because a lot of times, those kind of good stocks are also very expensive, right? You have very rare chance to buy them, and sometimes you found them. We just have to keep monitoring, and wait for opportunity to get in. So pretty much that's how I structure the whole allocation. Yeah.
Nice. So is Alibaba considered cheap now?
Yeah, I think it's cheap. Yeah, I do think it's undervalued. It's in terms of the PE range, the price earnings range, right? It's at a 5-year low. Yeah,
Nice.
you're getting the earnings have grown over the years, but the share price have been going down. So,
Yes.
right?
Ever since the trade war, it just kept coming down. Yeah. So what is your base case for Alibaba, right? We're gonna go into the juicy stuff, right? So what is your base case for Alibaba?
It is still a number one leader in e-commerce in China, right? Yes, there are competitors coming up, but it's still the number one, and it's also number one in terms of the cloud business in China, right? Your Amazon cloud, your Google cloud, all this can forget about going to China because it's a protected market. So they only allow their own homegrown companies to come up. And in terms of cloud technology and adoption, China is behind US, definitely, many years behind. I don't know whether there is some cultural differences that may result, or economic differences that result in a slower adoption of cloud in China. That is one possibility. If that happens, then that's not good for Alibaba. All right. E-commerce wise, the biggest worry is not the regulation, but it's more of the competition that's coming up. You have your Meituan, you have your JD, right? All these players, or even Pinduoduo, all getting bigger and bigger, right? That would take some part of it from Alibaba, even though it's still number one. I guess the saving grace was Alibaba's Taobao live streaming. I'm pretty big on that. I like the creator economy theme, and China is very big on this, right? And the West is just copying right now. Facebook getting more creators, creator studio for the audio side, right? You guys should be quite aware of that. But in China, they are way ahead. No matter what platform, you can actually make money of it as a creator, right? So the live streaming in China is really boosting e-commerce like hell, right? And you also must give it to them that they can invent a new festival to force people to spend more money, right? The 11/11, okay? It's pretty powerful, right? It's like, and every year it breaks record. Every year Alibaba just break record, selling more things online. And I think that live streaming will just push it even further for the next few years. It's not going to dry out anytime soon. So I do think that in terms of the business fundamentals, is pretty solid, right? And the price being whacked down is a good opportunity. And even though Jack Ma said the wrong things, he's no longer in Alibaba. No longer in Alibaba. He is in Ant Financial. He's in Ant Group, unfortunately, but it's just one part of Alibaba. Last time there used to be three things that help Alibaba, right? E-commerce, the cloud, as well as the fintech side. But I think the fintech will be hard, given that the government wants a lot more control and it forced them to become a regulated financial institutions. So I think the margins will come down, the growth will slow down, but we can forget about that, and we still have e-commerce as well as the cloud. And yeah, maybe the valuation will come down a bit because Ant Group is not that valuable anymore, right? Even if they spin off to a listing, I think it's not as hot as before, right? Yeah, if Alibaba managed to spin off before they call it off, right, then I think Alibaba definitely probably will be trading above $300 by now. More than that is even possible. But unfortunately, right, that in China, that's how things work. They don't have in US, right? You have a Senate that will give you a chance, right? Let me summon the tech leaders. Let's discuss about this. What do you think, right? I have this allegation. What do you think? Then they'll deliberate about it. Then months pass, and then they get to lobby. Do you want me to support you the next campaign? Okay, can you, so and so do this and do that, right? So US tend to not make decision very fast, right? Whereas China, there's no such thing as a Senate. There's only one person to decide. Okay, I don't like you. Let's kill it off, right? So then they will just execute, right? Plan to execution is like how y'all did this in 2 days. Okay.
It's more of the control also, right?
Yeah, exactly, right? So I think there's
Big
just
control.
pros and cons. On one hand, you can say that there's too much power residing in a few people in China, right? But I can also say that in US, because of all these companies able to lobby things, okay, you can say that it is a form of corruption to a certain degree, right? You can actually shape the politicians, give them favors, and maybe you can let it go easier. So I think no matter how the political system is structured, there is always a pros and cons. Yeah.
Nice. So overall, what you've just brought up is that we can kind of see Alibaba in three parts, right? The cloud computing portion, the e-commerce portion, and then the whole like live stream content creator portion.
Yeah.
So then,
no, the live stream is still part of e-commerce.
it's part of
the third part
e-commerce.
is the
Okay.
fintech. It's the fintech.
The fintech side of
And
things.
group is still worth money, just not as much as before. Still worth money. And I believe they will spin it off eventually. Yeah.
Nice. By the way, I just want to add on to the whole cloud computing thing. So I work for a cloud computing company for a short period of time, right? And people, I don't think a lot of people understand that computing and the internet is actually governed by wires. So actually in and out the cable, the data transmission in and out of China is very, very expensive. I think the name is an M2 connection or something along those lines, right? It's one of the most expensive connection in and out of China. So that in itself already forms a very big barrier for anybody that is operating out of China trying to enter the cloud computing space in China. Okay, so that is one big barrier that is already been set up, and Alibaba essentially owns that whole pipe, right? So yeah, interesting thoughts.
Yeah, thanks for sharing that.
Yeah, but you were saying about like how in the cloud computing space, China is a lot backward compared to the US, right? So how do you then see this thing? Is this like an opportunity, or like why, like how do you like infer from this reality?
I mean, it's backward in terms of the adoption, but Alibaba Cloud is still growing very well. So it shows that the adoption is coming, right? If the Chinese is not much different with the Americans, then eventually Alibaba will catch up, and the cloud business will be worth a lot of money. Like essentially for Amazon, many years the profits were driven by AWS, right? Amazon Web Services. So it is lucrative, and I think Alibaba just turned profitable on their cloud business segment this quarter, right? If I'm not wrong, that was what I remember, and that is promising by itself. Yeah.
Nice.
Yeah. So
what
Alibaba,
about
basically, I think that it is undervalued at this price. But of course, it's always better to have a longer term view, and just assume that the share price will be suppressed for many months. Yeah, many months. Yeah. So if it just jump up, right, then it's a good surprise. Yeah. If it don't, then at least you're not disappointed. Yeah.
Fair. But then what are your thoughts on the e-commerce space, right? Because like you said, in e-commerce, right, there are a lot of competition. JD, Pinduoduo, Meituan, everybody is coming in, and they're not like small people, right? They're not shy to compete, and they're pretty hard on this thing. So how do you what is the kind of numbers in Alibaba at this moment in time, and this being one of their core business, in fact their core business, how does that play out then in your view?
They still have dominating market share. The last I checked is still more than 50%. So it's still pretty strong. And they don't just have the B2C, C2C kind of platform. They also have the B2B platform, right? They are really original Alibaba platform. So they are a lot more. They are in a lot more segments than their competitors. That's one thing for sure. The live streaming is strong. I think the rest are not. The only concern that I have would be more of Douyin, because Douyin has managed to really gather a lot of people, right, on the platform. And once you get a lot of people on your platform, you can do a lot of things to them, right? So they are moving into e-commerce and payment system. All this is almost the Alibaba Tencent playbook, and I think that is one big one to watch. I'm not so concerned about JD, Pinduoduo, and Meituan. I'm more concerned about Douyin, because last time, if you remember, they always call it the BAT, right? Like US have the FANG, then China has BAT, Baidu, Alibaba, and Tencent. But we all know that Baidu is long gone. There's only A and T. But I think ByteDance will take that place, and the BAT will be restored. Yeah, so which means ByteDance is at that league. Yeah, I see ByteDance as the league of Alibaba and Tencent. Yeah, the rest are just the second tier kind of tech companies. Yeah.
Okay. Thomas has some thoughts about ByteDance. I think you wrote quite something about ByteDance, right? How do you think
Right.
they will affect this competition with Alibaba?
I think in quite a significant way, depending on the target audience that Alibaba is focusing on in terms of their live streaming segment. So TikTok or Douyin, they focus on like millennials and younger, right? But their live stream or their short video formats, right, is so far I don't see that being replicated by the Chinese companies, lah. Yeah. But they only target certain kinds of people, right? And the type of products that's being sold also, it might not be the same kind of things that Alibaba sells, right? But definitely, I think compared to the rest of competitors, totally agree. That's more of like the first tier kind of competitor as compared to the rest.
But I think, it's like every season someone uses a certain social media platform, right? And so Facebook was a period of time, different generations. So cannot forget that older people will get older, and then the young people will start to become the main bulk of consumers, right? And that's kind of where it can potentially hit towards. So
Facebook is like Gen X and Y, right? Then Instagram is Y, and then now TikTok, I think is closer to Z lah, small Z. And the younger Ys lah.
Nice. And you talk about like end financials and payments, being less profitable as compared to before, right? Can you paint some color on that? Like why is it going to be less profitable after regulation?
Because being a financial institution, right, means you will be subjected to all the regulations like capital requirements, all this. That means that you cannot lend out after a certain amount, and that limits your business, you see. Right, it's not that you have no business, but you can't lend out anymore. Okay, and actually your revenue will be lower, all your margins will be thinner, right? All these kind of things now, and your compliance
micro loans, right?
Yeah, that's I think that's what the government wants to kill, right? They have no problem with the payments. Yeah, the payments help to oil their engine and the transactions. They are more than welcome with that. But since I think 2017, there was a saga in China about all this peer-to-peer lending, micro lending. India it was a concern. They didn't bring down Ant Financial at that point in time because they had more trashy companies to deal with. So they shut all the P2P companies down. Yeah. But then I guess over time, they don't see the problem going away. So and maybe Jack Ma words will trigger as well, right? Then
you never know lah.
Since we want to do it, might as well do it one shot. Everybody just throw them in.
Fair. But are you concerned about shareholdership and the management at Alibaba? Because I mean, there are phantom board directors, there are phantom shareholders at this moment in time. So are you concerned about these kind of things? You know what I mean, right? Because when Jack Ma stepped down, he handed out the shares, he handed out the power to all these random people that you never hear before. They're probably insiders of the Communist Party, right? Are you concerned about such a structure? He passed to random people.
I think from a bigger picture, I'm not so concerned. Because at the end of the day, right, if China, I believe China has an ambition to take over US to become the world number one, right? And for that to happen, right, China needs big successful companies like Alibaba and Tencent. And they are just doing all this, right, to continue to have that reign over them. But they are not out there to destroy the both of them because they cannot afford to. If both of them die, there goes the Chinese dream already, right? So they are in this together. They just want to make sure that keep in line, and they have that. I have your balls, right? They just want to do that. If as long as you kowtow, then everything is fine. Yeah.
As long as you fall within the line, yes.
Yeah. So I think the bigger picture is more important than who owns Alibaba and things like this. Because as long as the Communist Party, right, also need Alibaba to succeed at the international level, right? So they are not going to go away. Yeah.
Nice. So then,
And
what about? Yeah, go ahead.
Yeah, it wasn't just Alibaba that was hit with the regulations, right? It was also others that were trying to build a digital bank and all that. Yeah, so it's not specifically aimed at them.
Yep.
Although like Bloomberg was putting out news of, oh, Jack Ma said this, wrong timing, why you do this like a few days before IPO.
Yeah. I mean, US will definitely want to pounce on any negative news, and unfortunately,
Likewise. China also wants to pound on negative news on US. Yes.
Exactly. But the only difference is that I guess most of our Singaporeans, they are used to receiving information from the West. So it's always a very imbalanced kind of information diet. You don't get much to hear from the other side.
Nice. By the way, I just want to point out, guys, if you are listening and you have any questions about the particular stock that we are talking about, feel free to comment in the comment section and we can immediately ask the question. Don't need to wait until the Q&A at the back. Okay? So yeah, I think we've covered decent grounds about Alibaba. Is there anything else that we want to add for Alibaba?
No, I think pretty much.
I think we covered a lot of the market segments, how they are different, and then we have to talk about the next big thing, right? Okay, thank you, Randolph. Good vibes. I get it. Cool stuff. So yeah, we're going to talk about the next big guy in the space in China, which is Tencent, right? Tencent, which owns WeChat, which owns Weibo, and everybody in China uses WeChat. Okay, I've not seen anybody that does not use WeChat.
And even PRC outside of China uses
exactly.
WeChat.
Even I use WeChat. Okay, so either way, WeChat is like the thing. WeChat is the OG super app. Okay, that everybody is trying to copy at this moment in time. Right, all your Grab, everybody, your Gojek, everyone is trying to copy that. But it's very interesting because all your Gojek, Grab, everybody is building on a utility function. That means based on based on ride sharing, then they build all these extra things. But WeChat is building on a chat basis, which means every day you're going to socialize on the platform already, right? So could you kind of bring us through this color of Tencent? Like, what do they? How are they like? As a business other than just an app?
I think you already pointed out that communication is very important. It's in fact a core function of humans, right? And that's what and we can communicate a lot of things at different depths, different levels, different breadth, and that's what makes us different from animals, right? So communication is always a very key thing, and Tencent managed to bring it all together, right, in the WeChat ecosystem, and they start to build all the other functions on it. Since everybody is on it, might as well you can use it to pay for stuff, you can use it to book tickets, you can use it to book your rides, you can connect with your friends or whatever lah, right? You can do all sorts of shit on it. So even Facebook, Mark Zuckerberg, right, did regret that he didn't take that copy that strategy on Facebook itself, right, on his messenger platform and things like this. And now he's just making recovery grounds now, trying to do more functions on WhatsApp as well, right? Yeah, it's not have business function, business account and things like this. And Tencent definitely have really built on their successes, right? They are not just WeChat. They don't just have a WeChat ecosystem that's very powerful, right? Have everybody on it, but they also have a very strong gaming roots. They started out from games, right? And they are today the largest gaming company by revenue, right? Aggregate revenue. So a lot of the top games developer studios are owned by Tencent, right? So I believe this is a growth theme in the future because content consumption, right, is going to be a lot more interactive, right? And games are very interactive. Okay, it's not like reading newspaper, listening radio. It's very passive, right? Now, reading blogs and things like this are also very passive. Okay, yes, you can leave a comment, but it's different. The level of interaction in games is another level, and with faster speeds, with better hardwares, gaming can be done everywhere, right? That's why mobile gaming also took off. Okay, and I think that they're in a very right space, and gaming is just going to grow a long time from here. And it's also part of the creator economy, right? Now you can play games that people watch you play games and you can make money. You can never dream of this job or career, if you want to call it a career, 20 years ago or 10 or even 10 years ago, right? It's still a remote possibility, but now is people have done it, people have shown it, and you have multiple platforms that can do it. Huya, Douyu, Bilibili, right? In US will be your Twitch. Yeah, I still can't wrap my head around it. Why would I want to watch somebody play game and still give him money? Right? You should pay me to watch you play game, man. Not the other way.
The same can be said of Starbucks. Why would you go to Starbucks? It's the experience, right? It's not just the coffee.
Yeah. I guess it's just a sign of aging. Yeah. So as you grow older, you cannot understand the world anymore. So it's just amazing that we have to come to this watching other people play games. That's it. I do think that it's a big market for Tencent from here. So they have gaming, they have the WeChat ecosystem, which eventually also lead to the very powerful fintech player, right? Then the third thing that is that is less well known is that Tencent has a very, very huge venture capital portfolio. They invest in so many startups. So they did opposite. Yeah, they did an opposite strategy. So they're actually pretty smart on that. A lot of the, like Facebook. Let's take Facebook as an example, right? If Facebook meet an formidable competitor, what they will do is that I'm going to buy you, right? Yeah, I'm going to buy you. Okay, I'm going to buy out my competitor. Then I have no more competitors, right? So that's why they are getting into all this anti-competition, antitrust laws. This hot soup now, right? That was how they intimidated Instagram to be sold to them, right? And WhatsApp came up, they buy over WhatsApp, and they tried to do it with Snapchat, but Snapchat didn't want to sell. And what they did is, okay, Instagram, let's do stories. Yeah, Facebook also has stories. Then everybody also stories, right? They're disappearing 24 hours post. Okay, yeah. So it was stolen from Snapchat, and it was successful on IG, and they survived that. Right, and Snap now have to move to something else, augmented reality, to really keep ahead, which is another story. Then Clubhouse came up, right, with all the casual audio stuff, and then you see Mark Zuckerberg very active on Clubhouse. I think they didn't want to sell to him, and now they have all the audio creator studio that's going to come out on Facebook. Right, that's how the West does it. I think is something cultural about it, right? It's maybe it's more Machiavellian kind of thinking. I'm gonna beat you, very, very competitive. Then what Tencent did was they know that they don't want to go into e-commerce, for example. They know Alibaba is very strong, right? They don't want to go into e-commerce, even though they can organically grow something, right? So what they did was that they rather invest in the competitors of Alibaba. So they invested in JD, they invested in Meituan, they invested in Sea, which is a competitor to Lazada, owned by Alibaba in Southeast Asia, right? So they just invest in all the e-commerce competitors to Alibaba. Right, that was their strategy, and it's not a small amount. They have like 20% stake in each of them. It's pretty big. And
I think India also, right? Flipkart.
I can't recall whether they have a Flipkart, but the majority of the e-commerce in China, they have a stake. I think Pinduoduo, they also have a stake. Yeah, so pretty much that is how that I can stay in the game without growing my organic capability, and I do it via my investments. So it's actually a very pretty smart strategy. Then they focus on their core, right? They don't need to divert their attention to somewhere else in a game that they cannot win. Yeah, like Google, they try to do a lot of spaces, right? They organically they rather do that, but you can see they fail in so many projects. It doesn't carry on. So Tencent was smarter in that sense.
I
And
just
not
want to
only
I want to paint some color there. That it is not just about Tencent being smarter. Actually, in China, right, it started with Weishang. That means on WeChat, right, there were a lot of people that were building their own like online store with
stores.
the WeChat official account, right? So they did try to push this WeChat Commerce for quite a period of time. Weishang was a very big thing in China. Was okay, but over time, of course, because we all understand in the e-commerce business, the logistic ecosystem is very heavy, very expensive to keep up with. So they definitely did not keep up with the whole supply chain side of things. And I think slowly over time, they just got phased out. Taobao, Tmall, they just kind of suck up all that part of the business. So
Yeah.
we don't want to make WeChat sound like some like very advanced, can see very far. They also got try their
Yeah.
way in WeChat Commerce, which is called Weishang, but it didn't work.
Yeah. Probably they hedge their bets, right? I try this, but at the same time I invest in the competitors just in case I fail, right? I'm still in the game. So that could be a possibility. And it extends beyond just e-commerce, right? They even went into mobility. Like they're also a shareholder of Tesla, a substantial shareholder of Tesla. They also invested in air taxis for the future. They invested in Didi Chuxing, which is the Uber in China. They also went into entertainment, right? They have a stake in Universal Group, right? They have a stake in Tencent Music, which is the number one music, controls three biggest music app in China, right? And also got a lot of antitrust issues now. And they also have a stake in Spotify via Tencent Music. And they also have a stake in Skydance Studio, which is that makes your Mission Impossible movies, right? So they also expand into there. To be fair, Alibaba also does that in some of this investment, but I would think that Tencent portfolio is actually a lot more impressive in many areas, and a lot of them are actually undisclosed. So you actually don't know how big this Tencent portfolio is. I suspect it might be the biggest in the world, bigger than those really full-time just do venture capitalist kind of job and kind of role. Yeah, maybe the only person that can lose to is the SoftBank guys lah, right? Which have sovereign wealth funds to back it up. But Tencent is using their own money, right? That makes it even more impressive, to build up such a big venture capital portfolio.
But that okay, so essentially Tencent is using the very classic high margin fundamental business, the core business, make a lot of money, and then take all these profits to go and acquire, and buy all these other guys that are upcoming and all these kind of things, right? Which actually SPH did that for a very long period of time, right? Media business was a very thick margin. Whoa, we slot in the SPH, right? Don't take umbrage. But anyway, so SPH did that for a very long period of time, but their core business over time shrunk, right? So if we bring it back, from as looking at Tencent from its core businesses, right? How do we try to understand Tencent as a core business other than this big venture arm?
Yeah, so you must really rub it in for SPH, right? So
hey,
every
two,
opportunity.
yes. 2 weeks later, this will be passé news, right? So must rub, yes.
I mean, there's a good point, right? So, but you're right in the sense that SPH core has been weakening, right? Whereas for Tencent, it has been growing. And if you look at the last 5 years on average, they've been growing their revenue like over 30%, right? And their earnings net earnings margin is that good 20%. So in terms of their core business, they have not shown any signs of weakening. In fact, it's pretty strong. At this kind of size, it can still grow at 30%, right? Which Singapore company is growing at that? I don't think any, not even DBS. So it's still pretty impressive. And I think the gaming segment, as well as the WeChat ecosystem, is still very powerful and very strong, right? As we speak, there are still new features going to build on the WeChat itself. But again, I think their biggest threat is TikTok, similar to Alibaba, right? Because TikTok is also a form of social media. Who is gonna stop like TikTok from rolling out a messaging system right within TikTok ecosystem. Right, it's possible. Okay, and they already have very massive numbers. Of course, not as large as WeChat, but there's a possibility where once people get very used to TikTok, right, and since you're on it, right, they go the other way lah. Okay, so you can still be from that ecosystem in WeChat itself. They can also introduce how to say the streaming of video games and things like this. Then you start to crouch into the gaming space, right? And I do think that actually it's not TikTok, it's Douyin, right? It's in China.
Douyin, yes.
So
Douyin,
yes,
Douyin.
I do think that is the challenge, and I do remember last time I saw a picture, right? Tencent or Pony Ma, the founder of Tencent, right? Will hold like dinner after like an internet conference or what with their investee companies, and the Zhang Yiming, which is the founder of ByteDance, is in one of those dinners. So I don't know what happened after that. So actually, I believe Tencent had invested in ByteDance before, but ByteDance had became so powerful that it was out of this Tencent ecosystem, and it just succeeded by itself. Yeah. So
Nice.
I think that ByteDance is still a threat to both Alibaba and Tencent. Yeah, it's really at that level.
Nice. Thank you.
Hey guys, I think there's a question from Nicholas in the comments. So, Baba and Tencent are good stocks. What will you recommend if someone is looking at value investing for dividends for long term? Unrealized profit will only belong to us only if we close our position.
Yeah, I guess this is a topic for another guest in this show, right? I'll just point you to some things. I do think that Singapore is one of the best country to invest if you want to do dividends. Firstly, it has one of the highest dividend yield on average in the whole world, and the dividends are not taxed. If you invest in a dividend stock in US, you get taxed 30% plus another 7% GST. Yeah, so it's not worth it. And the dividend yield in US is lower precisely because of the dividend tax. A lot of the management decides to use the money to do share buyback instead of giving dividends. When they do a share buyback, the tax is actually deferred later for them. So there's some tax savings over there. So I assume that Nicholas is in Singapore, right? So then the best dividend stocks are actually here. And we also have one of the best REITs market, right? Real estate investment trust, and many provides very good yield. Yeah. So
Yes.
yeah, don't need to look too far. Yeah.
Yeah. And they all have been sold down 5 to 8% just post announcement of lockdown. Okay. Not recommending any stocks or any REITs or what. Just go and think about it on your own. Okay. So yeah, another comment here by Nat. So I cannot imagine the younger folks growing old with Douyin or TikTok. You know, so essentially what he's trying to say is that are they really sticky? You know, or is this a fad? You know, but it has grown so big. I don't know if it's a fad. All right. So what is your take on this consumer habits essentially?
I don't think it is a fad. It has not been, how to say, it's not like it was successful like a few months or 1 year. It has been there for many years. Just that
it's not Clubhouse, right?
Yeah, just that we don't know. You see, we're not open to it, but they're actually in the works for many years. And ByteDance don't just have TikTok and Douyin, right? They also have Toutiao, which is also using an AI engine to push news to people, right? That also created a lot of complaints from the publisher, the media side. But they are just so powerful that you can't do anything about it. And they are pretty, I think it anchors around the entire AI that they've built, that very powerful AI engine. And with that, they can actually build a lot of other things. So short video recommendation, news recommendation, these are just the start. So I do think that they are onto something, right? The future is a lot brighter, and they're going for a listing, but don't know when.
Yeah, and we can gather again to talk about their listing another time.
Yeah.
So yeah, about gaming. Okay. Okay, Nicholas. Yes, I get it. A lot of people all sold down this period of time. So it's cake steam. I understand, but yes, like we pointed
Barbell
out in the
strategy.
beginning. Yes, exactly.
But if you're a long-term investor, it shouldn't be a surprise, right? Yeah, because the longer you hold, you will have more ups and downs. That's the part and parcel of the game. Yeah.
It's a given, right? So talking about a game, right? I want to dig your brain a little bit about the gaming space from Tencent, right? So if you think about it, how Disney used to run their things, right? They spend all this money, they create content, and then they distribute in multiple mediums, right? So they monetize in multiple ways, right? So are you seeing that same strategy playing out in games in Tencent or in China, or just the broader gaming space in itself? Like content creation becomes the core in games, but then the monetization becomes quite wild and all these different ways to do it.
I think in the game development, there are some teams that are going to be very uh, big, getting very big in the next few years or even the next decade. So let's talk about the monetization part, right? So besides just making money by playing games and let people watch you play game and donate money to you, um, there is a class of games, right? We call it the metaverses. Okay, basically they are just virtual worlds. Okay, where people go into that world itself and you interact. It's like partly social media and partly you can play games. We start to see that in the West. Okay, they started first. Roblox. I don't know whether you hear of like friends, children playing Roblox. It's very addictive, right? The Gen Z love it a lot, right? Record revenue, right? Even post COVID, record revenue, growing very well, and you can actually make money in that metaverse. For example, you can create a game. Okay, so it's like game within a game. It has an app store of games inside this metaverse. So the metaverse is really like a world by itself. Really, you can go and play game, and if a lot of people play your game, you get paid, right?
The world is really becoming a Ready Player
Yeah,
One world.
exactly. It is, and you can also make money. In the past, right? If you're a student, you holiday, you go and work in a pizza store. Get make some money, right? You can also do that in the metaverse. So somebody created this pizza store. You can use your
Really?
you can use your avatar to work in the pizza store to make money.
Like
Of
this
course,
is automated or like
no, not
a
automated. You
person
actually play. You go
literally
and
goes
serve.
and
Yeah, you go and serve the people who visit the store. Right? They are all
oh,
real people behind every avatar. It's shocking.
Wow.
Right? It's shocking, right?
insane.
So I do think that that gaming will move into this metaverse, right? And it is a fantastic thing. Okay, and I think it's good for artists, right? Because you can now design avatar clothes, branded stuff. You sell in that metaverse. It's all virtual, and you can actually convert that currency into real fiat money like USD or what to spend in the real world. Yeah. So yeah, that's metaverse, and the Gen Z are inside already. By the way, okay, and that is your 3D social media. What we are doing now today is 2D social media. Whether is it Facebook, Twitter, Instagram, it's 2D, right? But a metaverse is a 3D immersion experience. Yeah, it's not just a social media. You have a creator economy inside. You have a games inside. Yeah, everything. Okay, so they
Wow,
live in
wow,
that
wow,
kind of world, right? It's really a player one world.
wow, wow.
Ready Player One. Again, I don't play all this lah. So, and if you add in a crypto, so crypto also have metaverses like your Decentraland, right? So they actually have a blockchain and they have NFT on the land title deeds, the digital ones. So you can actually buy land and rent out, and you have the title deed because it's protected by NFTs. It's proven by the NFTs.
Wow, Piang.
Okay, so that is the entire gaming's uh, metaverse. Okay, we're still in gaming, right? So another closer one, I think, is the cloud gaming, right? In the past, if you realize there's a lot of people want to buy console and buy PS in order to play the best game or Xbox, the hardware has to be top notch. In fact, a lot of all these manufacturers, right, they sell you at a loss so that they make money on the games. Right? Because top-notch hardware is expensive, right? And they know that if they price it too expensive, nobody gonna buy. Nobody gonna play the game. So they actually subsidize it. Yeah, and that's how they make money. But going forward, right, a lot of all this computing power is done at the servers. Okay, so which means your device, it can be a shitty China phone, you still can play top-notch game, right? Because with 5G, the connection is so fast, there's no lag or minimal lag. Yeah, and then the computing power is all done at the servers. So cloud gaming is another one, which the games are moving there as well, right? Then the third one will be your AR, VR, augmented reality, and virtual reality, right? That also complements with your metaverse. Okay, imagine, especially in a post-COVID world, a lot of other active. I'm just stretching beyond just games for now. Like for example, you want to hold exhibition, it's almost impossible at this point in time, right? You want to hold a concert, it's also impossible. Okay, at least in Singapore, right? Small one maybe possible, but not the kind of big levels. But people go there for the experience, right? And people sell live concert online. I just don't know how much experience there is. But now imagine you can have your VR goggles. Okay, you can go inside in this metaverse, right? Then your friend also go inside, like you are going to the concert together. He's just standing beside you. You can actually communicate, right? You can even shout, okay, because it's very loud.
You can even hug, right, in the metaverse. It's like,
Yeah,
oh my god.
you can, right? So with that virtual reality, it just brings more immersive experience. I think that VR AR will also come up, and of course VR gaming is going to be very hot too. Not popular now, but eventually, because the VR hardware is not there yet. Yeah. Facebook have Oculus, right? So it's still in development. Still very bulky, very heavy. You wear the glasses. After a while, you get neck ache, right? You can't play it for a long time. But
You cannot go
eventually,
concert.
yeah, you can't go concert, right? Then suddenly you drop your glasses. Oh shit, am I out? Yeah, and you couple with those kind of you know, now creative, our local born creative, they came out with a 3D sound system. I don't know how that works, right? But imagine you have that it can give you a spatial range in terms of the sound, plus your VR that gives you that visual space, right? It can be really very immersive in the metaverse itself. And that makes your gameplay whatever, right? No more what very long curved screen for gaming. That's passe already. Okay, you're living in that immersive experience, and you may even have like other devices. I don't know, a sword, a
Treadmill.
gun, whatever, treadmill. Yeah, I saw some of these devices being sold online too, right? So I think gaming is a very exciting space. It's going to be very big, and Tencent will definitely benefit being the already number one in this space. Plus, they have almost all the top-notch studios. So whoever is going to win this gaming space, they are a very likely contender. Yeah.
Nice. For everybody that don't know, I think studios are extremely important in this gaming process. I think Apple tried to do the whole arcade thing. Google also tried to do some like gameplay, but they're very behind in terms of the kind of creative power that they have. Right? So a lot of the games are not up to modern day standards. Right? Game is a little bit like an arms war. It just keeps getting better and better and better and better unless you go indie and all. Right? So that's cool, man. Good
Apple
stuff.
tried to do the app platform now. They try to make the game publisher pay them a fee whenever people download from the App Store. Yeah, they go the other route. They go the ERP.
Apple always do that one. Always do that. But we can talk about that another day. Okay. So by the way, guys, if you have any questions about Alibaba or Tencent, feel free to drop down, in the comments so that we can, answer your questions before we tune out. I think we talked a lot about Tencent, a lot about Alibaba already. So we have one last thing that we want to talk about, is for people that, believe that Tencent and Alibaba companies in China are very powerful and they are undervalued at this moment in time and they have a lot of room for growth. What can they potentially do?
Yeah. So the lazy way is always using the ETF. And it is nothing wrong with that. Okay, I think
Nothing wrong.
majority of people should just do long-term ETF investing. You don't look at it, you don't get affected by the ups and downs, and it just compound in the background, and you can do whatever you want in your life, right, without affecting your finances. Planning for your retirement, which is actually very boring for a lot of people. Yeah. And if you believe in China, the rise of China, right, then one ETF that gets very good exposure is this MSCI China ETF, or iShares MSCI China ETF. The ticker is MCHI. And why is this good? Is because China is unique in the sense that their companies are listed in many places. compared to US, you think about US, right? They are US companies mainly list in US. Okay. But China companies, you hear of Chinese company listed in US. They call them the US ADRs. And then there are Chinese company that list in Hong Kong. They are called the H-shares. And then there are Chinese company that list in Shenzhen and Shanghai. They are the A-shares. Okay. So when you buy China ETFs, you have to be careful about that, because let's say you buy a China A50, you are only buying the top 50 company in Shenzhen and Shanghai. You won't get Alibaba, you don't get Tencent, because they're not listed as A-shares, right? If you buy your Hong Kong, what's that? They have a new tech index, right?
They're
The
gonna
Hang Seng
change the
Tech,
Hang Seng.
yeah, the
Yes.
Hang Seng Tech Index. Okay, so if you buy that, you only buy the Chinese company, tech company that are listed in Hong Kong, not in US, not in Asia. So you see, because of this uniqueness of Chinese company listing all over the place, just like Chinese going around all over the world and set up a China account in every country, you need to be careful. And MSCI China ETF is the one that has the broadest exposure, right? They don't care where they are listed, whether is it A shares, H shares, or US ADRs. With this one ETF, you buy everything. Yeah. So that's why I think that's the laziest way and the broadest exposure to the rise of China.
That's cool. That's cool. Any questions from the ground? Feel free to comment. We're gonna take questions.
I think fair note also,
and if
right?
not,
The top holdings.
The top
fair
holdings
note.
of MSCI China.
Hello.
Yes. You are around, Thomas. Yes.
Right. Yeah. So the top holdings. Yeah. So it's Alibaba.
Yeah. Tencent.
Essentially,
Is it
the
Alibaba and
yes,
as well
yes.
as the Tencent? How
Yes,
about the other
correct.
constituents? Does it make it big enough so that we can
Yes, they are
spread
like
out across?
600, 700 stocks. Like S&P 500 has 500 stocks, right? So this MSCI China has about 600, 700. Yeah, it has a good number of A shares like your Multi, Ping An Insurance, Media, Higher, all the big names. Yeah, they all have exposure. So if you want, you don't need to worry about anything else. Yeah, but the key thing is you only buy this if you believe in the rise of China, right? Yeah, it's gonna do well in the next 10, 20 years. If you don't believe in it, then no point getting this, right?
What are some potential tailwinds then when it comes to China?
I think they're already on the momentum will carry them there. Yeah. When US realize they are a threat, right? It's too late already.
Yeah.
It's too late already.
I
So
think they're so far ahead. So yeah.
Not that they are far ahead, they are still, in terms of GDP, they are still behind, right? But I think the momentum will just carry them to the number one spot. It's just a matter of time. Nobody knows exactly when. And I always believe that my children will work for the Chinese MNCs rather than the American MNC in the future. Yeah. So
yeah, they're all coming, right? They're all coming, right? The
exactly.
Singapore government is using them as flagship.
Exactly. Yeah. And Mumu, which is like Futu is the holding company, right? It's also a Tencent subsidiary or investee.
Exactly.
I don't know whether it's a subsidiary. I don't know how much they own. Yeah, but quite substantial.
Yeah, cool. We have one more question. Oh, we have multiple questions. Angus Low. How about ASHR ETF?
What is
Well,
ASH?
I don't know. I don't know if we know everything offhand, but
Oh,
immediately we searched.
Yeah, okay. So it is only A shares. That's the problem. Right. So you don't get Tencent, Alibaba, all this. Yeah. So it's nothing wrong. It's still quite broad, but just mainly in A shares. I suspect you get a lot of finance company, a lot of banks.
For sure.
Majority will be banks. Yeah.
A lot of those.
Tech exposure
FMCG.
will be, your tech exposure will be lower. You get a lot of banks and your consumer discretionary, which is your FMCG and products like this. Nothing wrong, just narrower.
Yeah. So essentially, the whole 1 hour that you listen to, right? No Alibaba, no Tencent in this ETF. So think about it, lah.
Unless you buy Alibaba and Tencent already, then you can buy this ASHR ETF, lah.
Fair. So depends on your composite. Okay.
Yeah.
Next question. Is there a material impact for MSCI that Alibaba switched from the ADR to the Hong Kong listed stocks?
Maybe there's some spread differences, the transaction slippage, but other than that, I don't think it's a big. It's not material, right? It's just a slight impact.
Okay, so then do you consider like ADR risk then? Is there a risk in ADR given today's situation?
Yes, I think the risk will go on because US and China are not in the best of terms. You will just get worse. You will not get better. And if there is a dual listing, right, might as well consider Hong Kong listing rather than the ADRs. Yeah, eventually they delist, then it's not that your shares will disappear. Like for example, Alibaba is convertible. One ADR is 8 Hong Kong shares, so you can convert from one direction to the other without any problem. Of course, it depends on how much your broker is going to charge you. That's the fees they're going to bear. Yeah, if you are worried about that, then might as well just buy from China, Hong Kong directly, right?
Can you give us a little bit more color, like why is ADR a concern?
Because of the, I think just today or a few days ago, they delisted 3 telecom company, Chinese company from US, right? And there's this ongoing threat. They say that you must let us look at your books, you must let us audit your books, else we can delist you by 2025 at that kind of timeline. So there is this risk. And that is also the reason why many Chinese companies started to just list in Hong Kong rather than go US, right? Ant Group initially was meant to list in Shanghai and Hong Kong, right? For their status, I think they could have gone for US, but they didn't want to, right? Because of this risk. Yeah. Increasingly, you might have more options in Hong Kong for all these Chinese companies.
Fair. Is there still a premium listing in the US?
I think it's more like where can you raise more money and whether you want to get an international exposure. Yeah. You will start to see more, not start to see, you have always seen the Chinese tech companies tend to prefer the US. I think also because their US market or US investors embrace technology a lot more readily than other countries, right? So that could be one reason that they can get a better valuation there. Yeah. So when they get better valuation, they raise more money. Yeah. Whereas the traditional companies usually they don't go US. They will stick with A-shares. Yeah.
Nice. One more
I think
question.
we got a question from Nicholas. Yeah, CQQQ. So
This will be
QQQ is
very-
a tech one for US,
Yeah.
then CQQ is?
The tech for Chinese for China companies. I think it's not broad enough. We are just investing in the tech sector, right? You probably need to pair with something else. It cannot be a one ETF to rule the whole portfolio kind of thing. Whereas your MSCI China, you can, because it is a good mixture. Whereas CQQ is too narrow.
Barbell strategy, right? Barbell strategy.
I mean, up to the individual, right? There are some people who don't mind going more narrow, and the only downside is that you be prepared that if you're narrow, right, there will be some years that investment will underperform.
You mean like this year?
Yeah, this year is an example, right? Then you have to tahan, right? You have to really have the conviction to hold long term. Okay? If not, you give up at the lowest point, you buy at the highest point. That is a recipe for disaster. Yeah. And then the worst is you repeat it again and again.
yes. But
I think
the
important
pain
also
is real.
knowing what to buy because CQQ, I'm looking at the holdings, the little bit random companies, Sunny Optical, King D, okay, so accounting software, GDS Holdings, Longy Green, and never heard of these companies. So a little bit difficult to piece apart whether these are companies worth investing in.
Yeah. Sunny Optical, they're also in the Hang Seng Tech Index. The Hang Seng Tech Index. So this, Sunny makes a lot of the Android camera lens, your phone camera lens. Majority is made by them, especially if you're using our Android phone. Yeah, iPhone is not made. It's other companies. So but they can be more foreign, right? If you are not looking into them that regularly.
Yeah, I mean it's the same as QQQ. There are a lot of companies inside that you don't know what's going
Smaller
on
lah, they're
because
smaller. Yeah,
yeah,
smaller.
yeah, but because they're all like relatively in the smaller tech growth space, right? So that's a general risk when you have a high concentration in the growth stocks. They tend to have very big fluctuations, and if you sway like this year, earlier this year, then you have to hold on if that is your conviction, right? If not, like what Alvin said, then if you sell at the bottom, then you tahan the
Yeah,
losses. So it can be a
yeah,
little crazy.
yeah.
Is there any final questions? If not, I think we're good. That's a great, discussion with everybody. So I'm gonna, just thank you for spending time with us. Stay tuned tomorrow for more good content. Wait. Got one more. Got one more. Last one. Last one. Go ahead, Thomas.
Heng Tech Wei, regarding gaming and Metaverse, is there a clear winner between Epic Games' Unreal Engine versus the Unity platform?
Um, I think there isn't a clear winner at this point in time. Yeah. The problem with all these younger growth companies is precisely nobody has captured the majority market yet. That's why they're going very fast. Everybody is capturing market share. Until things stabilize, then the growth rate will come down. At this point in time, it's very hard to tell who the winner is. Although Unity has a majority market share when it comes to mobile games, right? Most of the mobile games that you play are made with Unity. Um, and Unity also have some promising development in AR and VR, right? They want to expand the scope, not just in games. They want to attract developers for AR, VR applications, right? And I think that AR is going to be very immediate in the next few years. We're gonna get Apple glasses, Google glasses, all those kind of glasses, and glasses will be an in thing again. No, people will go for LASIK
Twice.
so that they wear the AR glasses.
Predicting
You know,
fashion trend
yeah,
here.
no, it's true. You see, I don't know lah. If you recall, okay, if you have used handphones since the first generation, there was a period where people like the phone to be as small as possible. People don't like large phones, like very bulky. Okay, there was an era without antenna, correct or not? Yeah. Then suddenly with that smartphone, everybody want the screen to be bigger and bigger and bigger. So I think that technology will change as well, and I think people will start wearing glasses. Having the AR function wherever you go. You don't need to flip out your phone to check whether this is the cheapest milk that you can get from the supermarket. With the AR glasses, they just tell you, right? Yeah, just buy. Don't think so much, right? Or whatever. Yeah, they give you direction where you drive. You don't need your phone to show you your maps anymore, right? They will just give you that direction as you drive. Yeah, so I do think that AR is going to be very powerful adoption in the next few years. That's closer than VR, and yeah, Unity might be in a good space
Nice.
because the
Okay.
other two are not listed lah. Even though you can get it via Tencent lah. Yeah.
Yeah.
Wow.
And recently there's a little bit of discussion on Epic Games. So yes. Okay. Last question. Okay. I'm gonna take this last question. I'm gonna ask this last question. Okay. So Randy has a question. What are your thoughts on Alibaba? Like a big part of their earnings depend on core commerce and the rest of their segment being relatively unprofitable.
I think we covered this just now. E-commerce is still mainstay and it's still the majority market share, right? Although all this can change, like how Lazada has lost that first spot to Shopee in Southeast Asia. But even if they lose it, right, they are second place. They're not far off. You see, so though I think don't write them off so soon. Taobao live streaming, I think, is very powerful. It can carry on for many years from here. So the growth is still going to be there, right? And the latest report, Alibaba still grow more than 30% for revenue, even at this size. So I think don't write them off so early. The other segments, as I said just now, I think that cloud business segment has become profitable. Okay. So if that momentum goes on, the cloud business can bring in the margin too, just like how AWS did it for Amazon. So I think don't write it off, but it's not without headwinds as we established that competition in e-commerce is rising, right? And the threat from Douyin is also big.
Yes. And Randy has one follow-up question on this. So he also want to know that what are your thoughts on a large part of the cloud earnings being dependent on a small segment of customers? Essentially means big customers lah.
Of course, it depends on who your customer is, lah, right? If your customer in China is Akong, then that's a good thing, lah, right? Just like in Singapore, lah. If your small segment of customer is some fishy customer, then of course that's a concern, right? So I think it should be fine. It should be very big enterprises, right? The only concern I have is that I really don't know whether China will adopt cloud as much as what we have seen in the West. That is still a big question mark. That will restrict the addressable market that Alibaba Cloud has. Yeah, that is a bigger concern that I have. Yeah, maybe in China it's still cheaper to buy the computer and have your own server in your office, because maybe their computer parts are just so cheap. They make most of the parts there, right?
Yes.
Then they feel that,
Go
why
to Hua
should I pay you a
Qiang
subscription? Yeah, why should I pay you a subscription fee every month when I can have it cheaper in my office or in some
Exactly.
warehouse, right? So
Exactly.
that is the question that I have, right? The adoption in China is a question mark. And that is a reason why China is behind in terms of cloud adoption. Right?
Fair, yes.
That is a big question.
Interesting thoughts for everybody that have not been to Shenzhen. You should go there and check it out, right? They have a whole second-hand supply chain over there, and
They
you
have
can get
50 Sim Lim Square.
exactly. Whatever you think Sim Lim Square, you go there, you're lost. It's like Orchard Road, but the whole Orchard Road is Sim Lim Square. Right, so visit Hua Qiang to get a clearer idea why people say Shenzhen is the tech hub of China.
Yeah.
Okay, so that's it for today. Thank you for spending time with us. Stay tuned tomorrow for more good content. And if you want to hang out with us, join our Telegram group. You want to hear more from Alvin, definitely check out Dr. Wealth. And also become a member for early release, premium investment content, closed-door discussion, everything you want to find out more about what we do, just head over to financialcoconut.com. And once again, I want to give a last shout out that's this Geek Out Live segment is sponsored by Moomoo, powered by Futu. And on top of their one free Apple share that you're going to get when you open a Futu trading account, they have launched an enhanced referral program, okay, for new users and your friends to earn up to 20 Twitter shares. Essentially, they want you to recommend more friends, and promotion ends 31st May. So what are you waiting for? Terms and conditions apply, yeah? So check them out. Go out there, and we want to thank them for sponsoring us. I want to thank Alvin for coming on to hang out with us today. So hey, cool stuff, man. Awesome. It was great discussion. I hope you have fun.
Yeah, thanks for having me.
Yeah, so thank you, Thomas. Thank you, Alvin. Thank you, all of you. Yeah, we'll see you tomorrow. And any follow-up questions, just come to our Telegram group and check out Alvin, Dr. Wealth.